to the management at Shriram City Union Finance. Y.S Chakravarti, MD and CEO, is now with us. Sir, can you talk about the gains that are coming in into Q1? Can you talk about provisions which have come up in Q1 and Q2? What is the current provisioning ratio? How do you see things going ahead?
The quarter one was in terms of for Shriram City was in terms of disbursement, it was a muted one. We were able to do some disbursement in two-wheeler and gold loans. We did about 1,300 crores of disbursement for both these products. Small business loans we have not yet started, but the current focus is on collections. Probably till the end of quarter two, we will be focusing on our collections. And we are seeing good traction in collections. We have hit almost 70% in June, and July was the traction in July was also good. We hit a 80% collection efficiency in July. So that's on the collection front. So we are right now focused on that. On the provision side, we have created a 180 crore provision for COVID in this quarter, and going forward we are conservative on the provisioning side, so we will actually create some more provision in the next quarter also. But looking at the traction of collections that are happening today, we are sure we'll get a clawback on write backs going forward from the provisioning.
Talk about the moratorium bit. What's happening over there? What was it at probably the peak? Yeah, what was it at the peak level? What is it now? How do you expect things to change after August?
As of now, we have about 20%, 22% of my customers and 25% of value under moratorium. But if you see from April onwards, there is a steady improvement in collections. Starting from a 32% collection efficiency, we have reached 80% in July. So we post-August, probably the moratorium will, some of the moratorium customers may still be continued to be troubled, particularly segments where we have funded for schools, restaurants. They're still troubled. So we may see some elevated delinquencies in that specific portfolio. So we have budgeted about 90 to 100 basis points of credit cost due to this.
All right. Hi, Mr. Chakravarti. This is Mubina as well joining in. And yes, it's the post-August scenario that I want to sort of discuss a bit more with you. You mentioned that you have provisioned for a certain amount, anticipating, what you could observe, after this moratorium period in August ends. Will you be okay on the coverage front? I mean, do you think that you will have to take some more provisions, to cover up for the delinquencies you may witness after the moratorium period ends?
See, as I said, we have a very conservative policy on the provisioning, so we will be taking some more provision, even post next quarter also. Reason is we don't want to see, though the collection efficiency is improving, but we still want to be cautious on that side. As I said, the current focus is only on collection, even the next quarter. So we are actually, probably we will be looking at about another 90 to 100 crores of provisioning for the next quarter also. We would be providing for about 2% of the 2 to 2.5% of the portfolio.
Okay, all right. Another maybe 2 to 2.5% of the portfolio, according to Shriram. Of course, like he mentioned, he has a bit of a conservative approach. I want to understand on, funding constraints, if any, that you may be witnessing. How are you analyzing the entire funding environment? Also, we noticed that the margins have, obviously fallen on a sequential basis. So, obviously borrowing costs are coming down. So if you could just shed some light on both aspects. How easy is it to raise funds in NBFC? What's the funding environment like? And also what's your cost of funding like?
Things I would say have marginally come down from a 19. See, the yield on asset has come down from say 19.85 year on year to 19.67, which is okay. I think we will, if you look at the PPOP, we are able to handle the PPOP well because we are also able to handle some of our costs. So that's margin side. I think we are pretty comfortable there. On the funding side, we are seeing some sanctions from banks. We have seen some sanctions from banks. There's something in pipeline, and we are likely to draw down the money in probably in another next week to 10 days. So it's slowly easing up. The liquidity is slowly easing up, and we are not really today worried on the liquidity side because the disbursements are also muted, and we are not looking at funding business customers probably till end of sometime in September. So that's not a issue as of now. We do banks. We are in talks with various bankers, and the response is encouraging.
Also, could you just give us a brief about what's happening in the entire MSME space? Once thing opens up, how do you plan to, assess your customers? What is the sort of strategy in the post-COVID world? As the situation on ground will change, you will also need to change your strategy to assess different customers.
Fundamentally, we are focused on trading and service community. So we have we do not have much of an exposure to manufacturing. So we'll continue to focus on these two segments of the MSME, particularly, as I said, trading and service industries. So these are, the fact is that post-COVID, post-lockdown, these were the businesses that have come back and were able to start their operations pretty quickly. So though the turnovers have not come back to normal, but the cash flows are happening. So we will continue to only handle these two segments, and probably we will look at much more closely on the cash flow side, and probably the eligibility norms or the credit norms would be a little more tighter now going forward. The cash flow side of the businesses, we will look much more closely. The focus would be on these two segments only, trading and service industries.
Right. In terms of capital raising, the financial sector has raised a lot of capital. Can you just talk to us about fundraising activity? Do you believe that the sector like NBFC will also need to do a lot of fundraising?
See, yeah, there are some companies definitely are they are raising money, but as of now, at staff Shriram City, we don't see that we would that we need to go. We are already sitting at close to 29% of capital adequacy, and on the liquidity side, we are pretty okay. So, as a company, we are not looking at raising anything right now, but I think it's better. Personally, if you ask me, yeah, it is better that you have an adequate liquidity in your books and be able to handle. Probably, yeah, the industry should look at it. But for us personally, Shriram City, we are not looking at any fundraise now.
Thanks so much, sir, for taking out time for us. Always good to get perspective from you. On that note, we're taking a break. Coming back quickly. Stay tuned.